You said at the beginning of your press conference that you plan to be more plain-spoken. And so, okay, I wanted to know what you would say to workers who are worried that, you know, this path of rate hikes that you've laid out will kind of undercut the wage growth they are just starting to see. Thank you.
You know, I would say that the economy is in great shape. If you look at household surveys, confidence is high. Look at businesses, confidence is high. If you survey workers about the job market, they'll say that it's a really good environment to find jobs. If you survey businesses, they'll say that workers are scarce. So I think overall we have a really solid economy on our hands here. And so what we're doing is we are trying to conduct monetary policy in a way that will sustain that expansion, keep the labor market strong, and keep inflation right at 2%. That's really what we're trying to do. And, you know, I would say I like the results so far. We've been very, very careful not to tighten too quickly. I think we've been patient. I think that patience has borne fruit, and I think it continues to. We had a lot of encouragement to go much faster, and I'm really glad we didn't. But at this time, continuing on that gradual pace continues to seem like the right thing. If we get a sense that the economy is reacting badly, then we'll certainly react to that.
David in Virginia.
Hi, David Harrison with Dow Jones Newswires. Where do you see the neutral interest rate is right now? Do you see it sort of inching up because of the recent fiscal stimulus measures? And how will you know when we're getting close to that neutral point? So if inflation stays around 2, doesn't go above 2 for a while, do you see a need to actually exceed that neutral point?
So I would just point you to the range of estimates at the committee, which I think is 2.25 to 3.5, and the median is 2.9, right in there. So that's the range of estimates of the nominal neutral rate of interest. And we do understand that there's high uncertainty around the level, but that's kind of, so you can think of 2.9 as being, which is sort of a full percentage point away from where Fed funds is going to trade after today's decision. You ask, is the neutral rate moving up because of fiscal policy? Yes. I mean, there should be an effect if you have increased deficits. That should put upward pressure on, a few tenths, let's say. Again, though, we're estimating these things. It's one of these unobserved variables, so it's very hard to. We shouldn't try to speak about it with a lot of precision or confidence. But yes, that should put upward pressure on it. How will we know? Well, I think you have to look at inflation. You've got to look at all of the indicators in the economy and look at inflation, look at unemployment, look at what's happening in the job market, and inflation's really important. It's worth noting that the last two business cycles didn't end with high inflation; they ended with financial instability. So that's something we need to also keep our eye on.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.